welcome back to the Midterm Rental Mastery Show. My name is Tanishia Epps, and I am a real estate investor based out of Richmond, Virginia. Although today I am coming to you from Newark, New Jersey. So I am at, you can see, I think over here, I'm at a conference called Deal Maker, and it is a conference all about buying businesses. So, one of the cool things about getting into real estate and networking is that you get to level up to other opportunities. And as you can see, I got invited as a VIP, so this is super, super cool. But today I wanted to talk to you about acquisition strategies for your midterm rentals. So acquisition, for anybody who doesn't know, is how you acquire the properties. And I'm going to talk about 4 ways that you can acquire properties for your midterm rental business. And if you have other ways, feel free to drop them in the comments and we can talk about those further. So let's start with, in my opinion, one of the easiest ways to get started with midterm rentals and also to scale your business is arbitrage. So you guys have heard me talk about arbitrage before. It is where you will rent a property from someone else, whether that be an individual or a company, let's say an apartment complex, and you then take that property and you sublease it out to other people. Now, typically that does require you to be able to furnish the property in order to rent it out. So I want to give you a little background on the first time that I did arbitrage, and you guys have seen the properties at this point that, most of them that I have arbitraged in. Let's start with my apartment complex. Now, the apartment complex that I worked with, they're phenomenal. They're really, really great people, and they actually were okay with me doing the business I do. I did not lie to them. I did not hide to them that I was going to sublease the property, and I think that's where a lot of people make mistakes and why all of these apartment complexes have no Airbnb. I call these short-term rentals for what people are thinking of as, the vacation style. But they don't want those in the properties because they're concerned about the type of people that they're going to have. But you can go to an individual owner if they have a house, a condo, maybe even a duplex, triplex, fourplex, and try to rent either a unit or the entire building. If you're going to do that, best to try to do it in your LLC. I do everything at this point in my LLC, even though when I got started, I had to give a personal guarantee because I didn't have the background and the experience. But if you can get an owner or even a property manager to agree to allow you to run your business from their location, all you now have to do is make sure that you understand your numbers and also what your expenses will be. And then you can acquire a property on arbitrage and get started pretty easily. It doesn't really take a lot of money to get started. And if you don't have the money, that is the beauty of having private lenders, where you can have someone else either invest and give you the funds and you give them a monthly payment in return, or maybe they'll partner with you. So the second way that you can acquire properties is via traditional financing. So this is how I got started on my long-term rentals. I actually went and got a loan, a line of credit under my LLC right before COVID started. And the problem was when COVID happened, that lender stopped lending. But I had excellent credit. And so I went to a traditional lender and told them what I wanted to do. And they were able to work with me to get a loan. Now for the down payments, because all I knew at the time was, hey, you've got to have money to bring to the table, I took out a home equity line of credit to give myself liquid cash. And I used my home equity line of credit for down payments on my properties. Now, again, I did that personally for me in the scope of long-term rentals, but you can do the exact same thing for midterm rentals. The thing that you want to make sure is that you can cover your main first position loan, which is with your actual lender. And then if you were to do a home equity line of credit, or if you were to borrow money from someone else for that portion, you just need to make sure that you can pay it back. But traditional financing is still an option. The next one is DSCR loans, and DSCR stands for Debt Service Coverage Ratio. What that means is you have a lender who will actually loan to your LLC rather than you individually. Now, they all have their different rates and they have their different terms, but generally, those do not require you to give a tax return for your business. And also, not necessarily, again, depending on the lenders, not having to give a personal guarantee because everything is backed by your business. So, DSCR loans are still a possibility where you can go and get a loan and buy a property that you could use for a midterm rental. Now, are the rates going to be a little bit higher because it's in a company name? That is definitely a fact. However, if you're going to be able to make money and you're going to have a healthy cash flow, then the interest rate and the payment are not as much of a concern as long as you can cover your expenses, you can cover that debt, and then you can also make money in the process. So DSCR loans are an option. Now, my personal favorite at this point is buying properties on creative finance. So for those of you that don't know, creative finance is buying properties either via seller finance, which means that the person that you're buying it from does not have a loan in place, and they are literally becoming your bank. For example, if I have someone that has, let's say, a duplex, and they want to sell that duplex for $200,000, I'm going to present an offer to that seller where I can make them monthly payments every month. And I just need to make sure that my monthly payment to them is less than, of course, what I'm going to make as a midterm rental. The second portion of creative finance is subject to. And this is where you take over the payments on someone else's loan. This is not an assumption. And you make those payments on their behalf. And then you can go and furnish the property. You kind of take on whatever their interest rate is. So for example, I have a property that I own already, and I own it with a couple of partners, including Pace Morby. He's my partner on this particular house. We took over the property subject to the existing financing because the person had the property on market and they were not able to sell it for the amount that they needed to sell it for. The market took a dip and it had been on the market for a while, and we reached out to the agent, and the agent was open to presenting to the seller what we were offering for a creative finance term, and the seller accepted it. So we've owned that house now since January, and that's the house that you have heard me talk about is rented out for almost $9,000 a month as a midterm rental. I'm currently under a contract for another one right now in North Carolina with the same thing. It's a seller that purchased the property in April of 2022. It's a brand new house. They actually had it built. And unfortunately, they were shipped out of the area. They are service members and serving our military community, and they had to leave. Well, they've been making payments on 2 mortgages since November 2022. That is a horrible, horrible feeling to have to pay for 2 houses when you can only live in one. And so we're coming in and taking over the payments on that mortgage for them, and we're going to make that payment on their behalf. And we're going to turn that one again into a midterm rental. And it's pretty exciting, the opportunity that we have in order to serve people and really help them, because that's what you're doing. You're a service provider and you're helping them out of a situation. And if I'm being honest, most of my deal flow right now is coming from realtors. I love working with other agents. I'm a licensed agent in the state where I live, even though I don't really do much with my license, but I have that, kind of in my pocket. But I love working with other agents on listings that are about to expire, especially listings that have recently expired, but their client still wants to sell them, or if they've been aged on market for a while, or if they just have low equity. So there are multiple ways that you can get into purchasing a property, but you have to decide what makes the most sense for you. Again, for me at this point, arbitrage and also doing creative finance have been the 2 things that have really propelled my business for me. But that does not mean that I won't go and take out a DSCR loan if it makes sense on the right property. I'm just at the place right now where I don't need to do that as much because I have people bringing me opportunities on creative finance. I have people bringing arbitrage opportunities. So I keep a healthy flow of deals to look at, and I do not take every single one because everyone just doesn't fit what I'm looking for and it doesn't serve my clientele. So again, I wanted to take a moment just to share with you the 4 ways that I look at for the ability to acquire properties for midterm rentals. And I really appreciate everyone's comments on all the videos, all the subscriptions. It's greatly, greatly appreciated. And to all the people that have booked consultations with me, I do one-on-ones and I really try to figure out what's happening with you and your business and what you want to do. And I custom tailor my conversations toward the people that I'm speaking with. So super grateful for the people that continue to book consultations with me. If you would like to schedule a consultation, my link is in my description box in my bio, and also it's on my link tree, which you can find in the description box and also on my Instagram. If you haven't subscribed yet, please do. I can't wait to come back and talk about this other deal that I have under contract, because I'm really excited about the partners that I have on this deal and what we're going to do with it. And also, this agent that I'm working with, she is pretty awesome, and she's already sending me other deal opportunities. So go out and network. If you guys remember those other videos I've done about communication and getting to know people and network, tell everybody what you do. Tell them how you're serving people. My most recent private money lender literally just loved the service that I was providing to people, and he's lending on our deal that we have upcoming. So, if you've never been a private money lender, but you have some money sitting around and you're interested in being part of our deals, you're welcome to message me. I'm happy to talk to you. But in the meantime, I have to get ready to go because we have this VIP event at an axe throwing place called Bury the Hatchet, and one of the facilitators for our event actually owns it. So who knows, you may see me come back here, in the next few months talking about a business that I bought on Creative Finance. The world is full of possibility, and I just hope that you do everything you can to take advantage of it. So thanks so much for watching and subscribing and staying with me as I go through this journey of midterm rentals, and I will see you the next time.